This is the Asia Train. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for gains, with the Aussie and the yen higher against the greenback as traders assess Donald Trump's Treasury Secretary pick. Scott Bessent is viewed as a fiscal hawk who favours a gradual approach to tariffs, the nomination of a hedge fund chief also being seen as Trump's nod to Wall Street. Plus, Nvidia's Jen-Hsun calls for global cooperation as he visits Hong Kong amid fears of growing tech tensions between China and the US.
Take a look at how we're setting up across Asia. We have seen significant pressure among Asian stocks in the month of November. We're headed towards the first back-to-back losses this year. The Nikkei, in fact, lost ground for the past 2 weeks. We're seeing futures pointing higher. The ASX 200 really not doing much at the moment, but this, of course, as we're seeing the staggered open. When it comes to the Kiwi dollar against the Aussie dollar, we're seeing that 2-year low. We're expecting the RBNZ to cut rates this week. We are expecting a rate decision from the BOK as well. Not much change expected there. Of course, we're following the U.S. dollar's pressure on the Asian currencies as well. The dollar has been on a phenomenal run. We're talking about 8 weeks of gains already. Take a look at how U.S. futures are coming online, because when it came to the Treasury sell-off, we saw a little bit of a breather on the Friday session. We were really catapulted higher by those Trump trades that really boosted the equity markets. We were watching Bitcoin as well, close to that $100,000 level. But it was really all about that announcement, that nomination of who could become the new Treasury Secretary, Haidi, that we'll be really watching for that reaction as this candidate is perceived as more market-friendly.
Yeah, and it is sort of a sense of, I guess, relief, right? Because, Shery, as you mentioned, President-elect Donald Trump tapping the hedge fund executive Scott Bessent as Treasury Secretary is a clear nod to Wall Street. Our Bloomberg editor Tony Chisco joins us now for more. And, Tony, this nomination in particular took a lot longer than others. And it's interesting because with so many of the other appointments, we've seen that willingness to push back against the establishment. Is this sort of more paying heed to Wall Street?
Absolutely. As you said, Trump has had a very clear record so far, and perhaps not very surprising, of appointing loyalists and people aligned with his agenda, including members of Congress, Republicans. So Treasury Secretary was, of course, very closely watched, and it was also very contentious for the reasons that you outlined. He needed to find somebody who sort of fit with his worldview, including the wonderful word that he loves, tariffs, dollar dominance on the global stage, and at the same time somebody who wouldn't spook Wall Street, and that took a while, and in the end he settled on the man who was considered the top, or one of the top contenders from the very start, which is Scott Bessent.
Some are expecting even a weaker dollar from this nomination if it were to go through. What are some of the areas that we're expecting to see the most impact from the Treasury Secretary?
Well, it's interesting. I mean, Bessent has taken some fairly strong views on, or maybe unusual views on the Fed, for example, in the run-up to being chosen. He was the one who said that maybe there should be a Fed chair in waiting to sort of give markets guidance before the current chair leaves. In other words, an early nomination of the next Fed chair, which of course goes to Trump's whole issue with Fed Chair Jay Powell, and their sparring over the years, although Powell was appointed by Trump, and the question of interest rates. So will Bessent sort of go down that route now that he's been named or nominated Treasury Secretary? That remains to be seen. He's also sort of tried to align himself with Trump on tariffs, although tariffs are not really a favorite of Wall Wall Street and the markets, and even necessarily U.S. industry. And he said that, yes, as Trump himself has hinted, the tariffs could be a way to sort of strong-arm other countries on the world stage, but at the same time, they could be a useful actual tool for helping American workers. So those are some areas where Bessent has actually spoken out recently.
Treasury was sort of one of the last missing major puzzle pieces of the contours of the Trump cabinet, right? How much of this is still a wish list? Because with the sort of early but perhaps not unexpected exit of Matt Gaetz, there's a lot of people wondering if there's other candidates that may not make it through confirmation.
Yeah, some of these nominations are clearly fraught, and we heard some words on Sunday even from one of the more senior Republicans in the Senate, James Lankford, who said that, well, we're going to give Tulsi Gabbard, who is Trump's nominee for Director of National Intelligence, sort of a thorough questioning because of her record of what some people or what her critics see as sort of trying to align herself with Russia and visiting Syria and talking with Bashar al-Assad. So that's one. Pete Hegseth, the Defense Secretary nominee, is another who has faced some sexual assault allegations, which, however, he has denied. And there's been a lot of rallying, at least publicly, by Senate Republicans behind Hegseth in the last few days. So that's still in play as well. I think you can safely say that all of these will come before the Senate unless there's some unforeseen development in January, and there's still some room for uncertainty there, I would think.
Bloomberg editor Tony Shushka there. Let's bring in for some analysis in terms of how investors and markets will be taking this. Brian Jacobsen is the chief economist at Annex Wealth Management. Brian, great to have you with us. And, there's some room for uncertainty, just picking off what Tony said a few seconds ago. There certainly is when it comes to how the next, 2 to 4 years is going to play out, right? If we start with the Treasury pick, is there a sense that at least in, on some fronts, we see President-elect Trump taking a more conservative approach here?
Yeah, thank you for having me. And I do think that we've traded that election uncertainty for some policy uncertainty. But with the recent picks, especially with Bessent, I think that it really helps reduce some of that policy uncertainty a little bit, or maybe makes us a little bit less unclear as to what the path forward might be. I mean, somebody like Bessent, very well experienced, his credentials are beyond questioning here. And I think that he actually brings this sense of almost like gradualism to the administration, as opposed to taking some sort of big bang approach to making big policy changes. I think he understands that any changes that are to come, whether it's with tariffs or on the fiscal situation, that you want to telegraph what those policies might be and then to implement them more gradually. And so I do think that there is that little bit of a sigh of relief that we're going to experience in the markets here, that it's an America first kind of administration, but not an America exclusively kind of administration.
When you take a look at the potential tensions between the Fed's path forward and what fiscal and sort of fiscal adjacent policies might look like, everyone talks about tariffs, but of course there's perhaps bigger implications from immigration, from tax and some of those other policies. Do you see a meaningful risk there that the Fed gets derailed from what it's able to do?
I think that the Fed is going to be very reactionary to anything that comes out on the policy front, mainly because if they try to anticipate what policy might be, they will look like they are trying to either thwart the administration or support the administration. And, we want to make sure that they stay very independent. And so we just really need to focus on what is the data actually telling us. And when you have the October employment situation report showing only 12,000 job gains, and then you get the state level data showing that 29 out of the 50 states had a reduction in payrolls, it's showing that maybe that October number wasn't an aberration, that you are seeing that labor market cooling. I think the key thing is really going to be in terms of the inflation number. So the Fed, in my mind, is still probably on track to cut one more time this year, 25 basis points, but then go at an every other meeting pace with 25. So I'm not sure anything that we've seen with the election or based on our expectations of what's coming with policy over the course of the next year is really going to change anything in the near term for the Fed.
When it comes to more sectoral calls, we are headed towards the U.S. shopping season. Of course, we have Black Friday, we have Cyber Monday as well. Are there any pockets among U.S. consumers that you would like to really add exposure to in the U.S. markets?
Yeah, the way that we're looking at things here at Annex with exposure to the consumer, keep in mind retail sales, especially during the holiday shopping period, that's about 20% of retail sales on a volume basis for the entire year. So it is a make or break season for a lot of firms out there. And it looks like the vast majority of that is likely going to be more on the online as opposed to on premises kind of sales as far as the growth, right? Slowdown in growth from the 4% growth that we had last year to maybe 3%. So maybe a little bit of a lackluster kind of consumer picture, especially as you have wage growth on the lower end of the income spectrum coming under a little bit of pressure. And then on the upper end of the spectrum, you're seeing a few more job losses, a little bit less interest income there. And so we don't actually have, we're not highly levered to the consumer in this type of environment.
What about when it comes to emerging market growth? We have seen a lot of optimism in this sector, but at the same time, given the volatility that we're seeing in the U.S. market and how some of these EM economies are so heavily geared towards trade with the U.S., the potential for more tariffs under Trump 2.0, where do you see some of these economies going?
Yeah, in the near term, we do think that we're going to see emerging markets come under continued pressure, mainly because of the fear of, is President Trump going to be using tariffs as a negotiating tactic, or is it an actual tool that's going to be implemented and used repeatedly? And so our belief is that it is mostly that negotiating tactic. And so we could see those markets come under further pressure until you get a type of relief rally, somewhat reminiscent of what we had under President Trump's first administration in 2019, where you had the trade war, but then suddenly in October of 2019, there was the détente, or almost the truce, between the U.S. and China, and then emerging markets began to rally. We think a lot of that can play out over the first quarter of this upcoming year as people figure out that the tariff threat is indeed just a threat and not necessarily going to become a permanent tool.
Jacobsen, always good to have you with us, Chief Economist at Annex Wealth Management. We have more ahead on the Asia trade. This is Bloomberg.
Iran reportedly plans to hold talks about its nuclear program this week with European nations, including the UK, France and Germany. Tehran last week said it would ramp up its nuclear fuel-making capacity after it was censured by the UN atomic watchdog. For more details, our Bloomberg editor, Michael Heath, joins us now. So what do we know about these upcoming talks and, I guess, setting expectations for results?
Yeah, I mean, it's a tough one, Heidi, because Europe has always sort of been the softer side when it comes to dealing with Iran. They were very invested in the nuclear deal that happened under President Obama and that was later scrapped by then President Trump. They were quick to get into business with Iran, and they see negotiation as the best way forward. The US obviously, just historically, because of the hostages of 1979 and the acrimony that's gone on there, has always been a bit more, little bit more wary about dealing with Iran, and so Obama striking that deal was really quite surprising. But the question that's sort of opening up is, and Iran is sort of making clear that it would be really quite keen in making some sort of agreement, is whether President Trump, reprises what happened in 2017, where he opts for maximum pressure on Iran, or whether he sees an opportunity to do some sort of grand bargain here, which we know he likes, these grand sort of things. So, Iran is potentially a huge market. It's been closed for a long time. There are a lot of business opportunities there. So the thinking seems to be that probably he'll go for maximum pressure, but as with everything with Donald Trump, you can never be quite sure. But Europe is, I guess, trying to set the stage that if he does opt for doing some sort of a deal, there's a basis to work with there.
The other thing is that, there's the anticipation that, yes, he loves a deal and he would also perhaps love to, wrap up a complicated region in one, right? So potentially other implications for what it means for Iran's proxies and all of the different conflicts that are on foot.
Well, look, what we seem to be seeing is that Israel is very much open to ending the war with the conflict with Hezbollah. It was presented in one of the reports as a gift to Trump. So they seem like that they feel like they've sort of accomplished a lot, or perhaps as much as they can accomplish when it comes to degrading Hezbollah there, which would take the pressure off of Iran to some extent. There's still obviously the Israel versus Iran question that goes on there, but Israel's making no movements at all when it comes to Gaza Strip and Hamas. And the reason for that is they have this strong settler faction, right-wing faction in the government it seems quite keen to actually get some Israeli settlers in there, which is going to be a dramatically bad development if that happens. So really, it's just hard to see how it all squares. The other thing for Trump is that the Middle East today is very different to what it was then. Iran and Saudi Arabia were at each other's throats in 2016, so Saudi Arabia was very keen for Trump to impose that pressure on Iran. Saudi Arabia and Iran are now much closer, and also Iran has some friends now. It's closer with Russia, with China, so it's not quite as isolated as it was. So it's a much more complex environment.
So with the changed landscape, how are we expecting the Iranian leadership, and we have a new president there too, to deal with Trump 2.0?
Yeah, well, Shery, it's always an interesting one because Iran does, at regular intervals elect these sort of what are called reformist groups, but at the end of the day, they come out of a very, very conservative ideological regime. Look, it does look like the new president has made offers that he would like to talk. He'd like to find some sort of deal. And the reason for that is Iran's economy is really in quite difficult straits. It's running inflation at 30%. Its infrastructure is degraded. It's having to sort of import in order to produce gasoline for industry there, despite being such a wealthy oil country. So look, in the past with new presidents, they've ramped up the whole nuclear issue to try and strengthen their leverage. They're sort of coming at it a different way. Now, the question is whether Trump and his cohort view that as weakness to be capitalised on, or as an opening to perhaps make some sort of deal. And we'll have to wait and see on that. But the foreign policy people that so far President Trump surrounded himself with, they're very hawkish towards Iran. They're very pro-Israel. So it would be quite a turn-up if they opt for more of a negotiated option.
Bloomberg Eco-Editor Michael Heath here in Sydney. More ahead on the Asia trade. This is Bloomberg.
Nvidia has also benefited from being in this region, in China. We came over 25 years ago. Nvidia design centers in Hong Kong, Pudong, Beijing, Shenzhen have many proud HKUST alums and longtime colleagues who have helped me build Nvidia. They've also helped build China's technology ecosystem from the very beginning. We've had the benefit and the great joy and privilege of watching the amazing technology industry form in China.
Jen-Hsun Huang speaking at a university in Hong Kong where he received an honorary doctorate at the weekend. Let's bring in our tech reporter Annabelle Drewlers. Belle, so this was a big honor for Jen-Hsun Huang. What exactly did he talk about?
Yeah, a big honour for Jen-Hsun Huang, but I think also a big honour for all of those students in attendance. What a way for you to finish your academic studies by hearing directly from the CEO of one of the world's most powerful, one of its most biggest companies as well. But Jen-Hsun Huang in Hong Kong over the weekend, where you can see him here, he was receiving an honorary doctorate in engineering from the Hong Kong University of Science and Technology. And as you just heard there, he spoke at that address. And really this was a moment for him to make that case for global cooperation, because you think about that tight balancing act that Nvidia has. It's not only between business operations in the US and also the revenue it's generating from China, but of course it has major partners like TSMC sitting in Taiwan. So Huang really took the moment to emphasize that call and that need for harmony. But that's not to say, of course, he's not thinking about what that will look like with President Trump back in the White House. And there was actually a press briefing that followed his address, and we had a chance to ask him about how that cooperation could end up being undermined by rising US-China tensions. Take a listen.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously compliance with laws and policies, continue to advance our technology and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
So that was actually in response to our question at the press briefing, and again, just sort of echoes what we heard from Jen-Hsun Huang last week, because we had earnings and he was sort of asked something around this topic, but essentially Nvidia is, of course, pledging to continue following any US restrictions on semiconductor or advanced computing technology to China.
Did we get any update in terms of some of the concerns that investors have of the time frame of being able to make these advanced chips?
Well, we definitely did get an update. We personally got an update on the relationship that it has with Samsung in particular, because going back to that earnings call last week, actually Jen-Hsun Huang called out a number of its biggest suppliers like TSMC, for instance, SK Hynix, ones that are really helping it bring those semiconductors to market, the likes of the Blackwell system, for instance. There is one notable absentee from that list, and that's Samsung, and there has been the criticism facing the company this year, and you've seen that stock market reaction where it slid nearly 30% year to date. It's off the back of the company perception that it's missing out on the AI boom, and where it really is looking to take a piece of that is in the HBM market, the high bandwidth memory market. It's an essential part of AI infrastructure. Samsung hasn't been able to get its technology or its advanced AI memory chips certified just yet. And again, on the sidelines of the event, we actually managed to ask Jen-Hsun Huang about that specifically. He did say that they're working as fast as they can to certify that memory, and they're looking at both the 8 and the 12 high HBM3E offerings in particular. So it still seems like Samsung could have a ways to go here. They had actually pledged in their earnings call that they would be due in the fourth quarter, but it does seem time is running out. Certainly something that traders or analysts are watching very closely.
Annabelle Jewellers there in Hong Kong. Let's get you some of the corporate headlines that we're following this hour. Gautam Adani and his nephew Sagar Adani have reportedly been summoned by the SEC to explain US allegations in a $250 million bribery case. News agency PTI says they've got 21 days to respond to the legal requests. Meanwhile, a US agency says it's still conducting due diligence after last year agreeing to a $500 million loan to an Adani group-backed port development in Sri Lanka. Wicked and Gladiator 2 opened to a combined $170 million in US and Canadian theatres, a positive start to the holiday season for cinemas. The film version of the hit Broadway musical came in first with $114 million in ticket sales.
Take a look at how we're trading early in the Asia session. We are seeing the ASX 200 gaining 0.7%, being led higher by real estate and consumer discretionary stocks. Financials really not doing much at the moment, although tech is still gaining about 0.3%. We have 2 weeks of losses for the Nikkei. Right now, we're seeing gains of about 1%, so we could see a little bit of a rebound if that continues throughout the regular session. U.S. futures right now not doing much. We had some gains fueled by Trump trades, those beneficiaries of the incoming administration's perhaps looser regulation and business-friendly stance. Right now, the yen still trading around that 154 level, Haidi.
Shery, we've been watching negotiations fractious as they've been in COP29 at the summit that has ended with nearly 200 countries agreeing to triple the amount of money available to help developing countries confront rapidly rising temperatures. That came after 2 weeks of intense and sometimes hostile talks, and may even be seen, even by supporters now, as insufficient and disappointing. Let's get the views from our climate and ESG managing editor David Stringer for more. So it was tough even getting to this point. How would you assess this deal?
Morning, Haidi. Yeah, as you said, incredibly fractious weekend of talks in Baku, and at one point in the early hours of Saturday in Baku, it did look as though these talks would fail, which would have been extraordinary. Very rare that particularly on the finance track, these talks fail. However, they will pull back from the brink some intensive negotiations that finally produced ultimately a compromise that perhaps no one is entirely satisfied with. And as you said already, even within the minutes and hours after the deal being gavelled and officially accepted, we were hearing from the likes of India, from some of the smaller and more vulnerable developing nations who simply argue that the amount agreed to is nowhere near enough. Simply not what is necessary to help them mitigate the impacts of extreme weather and climate change. So a $300 billion deal, it is the biggest climate financing deal that's ever been agreed in the COP structure. But you've got to compare that against what the UN and others were saying was necessary. Figures, north of $1 trillion a year.
They were fighting explicitly about referencing fossil fuels by name in the deal. Tell us a little bit more about what were the most contentious issues here.
That's right. If you cast your mind back 12 months in Dubai, it was hailed as something of a landmark at that point. The fact that nations had agreed to an eventual move away from fossil fuels. Even that tepid language, though, is something that couldn't be repeated here. And there was certainly some maneuvering in negotiations from the likes of Saudi Arabia, who were keen to stress a wider suite of options in the energy transition, and that has blocked any explicit reference to transitioning away from fossil fuels. It's something that will be returned to and at the next COP, which takes place in Brazil next year. But of course, by then, we'll have a Trump presidency in the US. The US, of course, the largest oil producer, and perhaps less incentive to stiffen that language.
How did it end up working out with China? Because one of the big question marks going in was how Beijing was going to position itself, right? There were some red lines being drawn about being classified as a donor country.
I think China's role has been absolutely fascinating, particularly this COP. As you said, one of the key issues heading into this set of negotiations was around the status of China. Is it a developed nation? Is it a developing nation? Should it be a contributor, along with other rich countries, to the pool of money that's channeled towards poorer nations? On that front, there was no progress. While China will continue to, in its own institutions and sort of bilaterally be a donor to poorer countries, it didn't agree that it should be included with other developed nations. So certainly that continues to be a sticking point. However, what we did see is China take a really active role, particularly as negotiations got towards those tense final moments. Chinese diplomats were really instrumental in calming some of the concerns and tensions from nations like India, from some of the smaller states. And it suggests that going forward, China will continue to take perhaps an even larger role in climate diplomacy.
Climate and ESG managing editor there, joining us with the latest on COP. David Stringer, thank you. And other stories that we're following at the moment. The Chinese government says it started a special program to crack down on what it calls unfair internet practices. Regulators say these include manipulating rankings to hype up hot topics and infringing on people's rights to do business online. Beijing is urging portal operators to rectify issues and enhance algorithms' security. The program is in effect until February 24th next year. Singapore Prime Minister Lawrence Wong is set to take charge of the ruling People's Action Party, consolidating his leadership ahead of a general election due next year. The PAP has run the city-state uninterrupted since independence in 1965. Wong, who is also finance minister, has pledged to boost safety nets and reskilling programs as part of a national strategy to fight income inequality.
Well, Shery, the Australian government is dropping a planned law to force social media companies to crack down on misinformation on their platforms. Bloomberg's Paul Allen joins us now for more. So, particularly as we head into an election year, why did they drop it? Too hard?
Yeah, too hard, and an even simpler reason. Couldn't get the votes. It was never going to get through the Senate. So we had a statement from the Communications Minister, Michelle Rowland, on Sunday night saying, look, this isn't going to proceed because there's just no pathway to get this through. Now, the bill would have made it a requirement for social media platforms to address fake, misleading, untrue content on their platforms, content likely to cause harm. Sounds great in theory, but then how do you define that kind of thing? So it opened up a Pandora's box in terms of a discussion over freedom of speech, and there was opposition from all sorts of segments of society, church groups, human rights organisations, libertarians, but most crucially the coalition in opposition here and the crossbench as well. So there was just no path to get this done.
And in a lot of ways, we've seen the Albanese government really try to make it a core kind of point of leadership to clamp down on, you know, what it sees as sort of harmful dissemination of information. Does this mean that its efforts to get the age limit on social media perhaps is going to be more problematic?
That one looks like it's going to survive. A much better chance on this because even the opposition leader, Peter Dutton, is in favour, even though some members of his party and members of the National Party, the other party of that coalition, are not in favour of this. But that law would ban children under the age of 16 from accessing social media. More obvious questions arise. Well, how do you enforce that? Well, that's going to be the problem of the social media companies. There'd be no penalties for parents or users under the age of 16. So Anthony Albanese said, look, it's a little bit like the underage drinking laws. I mean, people violate it, but it's about drawing a line in the sand and, you know, describing where society stands on this. There's been a mixed response from the social media companies. Meta seems to have been given a cautious embrace. It says it will respect any age limitations, but it does have questions about implementation. Google and X have been silent. Not silent, however, is the ex-CEO Elon Musk, who was a vocal opponent of this, and he sees it as a backdoor way to control internet access for all Australians. But that aside, this one looks like it's almost certainly going to get passed this week.
Elon Musk, vocal, shocking.
Who'd have thought?
Paul Allen in Sydney with the latest. More ahead on the Asia trade. This is Bloomberg.
The Japanese cabinet has approved a $140 billion stimulus package after the prime minister pledged to ramp up support for households and businesses struggling to cope with higher costs. Economy and government reporter Erika Yokoyama joins us now in the Tokyo studio. This was pretty much anticipated, but what went into the package?
Yeah, right. It's actually pretty big in size, highlighting Japan's addiction to a massive spending. Then the 60 pages of document outlines how the government's trying to tackle a wide range of issues from like national security to regional revitalizations. But I guess people are the most concerned about the price relief measures. As you know, like real wages are still not like keeping up paces with the inflation. The government is saying it will resume the utility subsidy and also offer some cash handout to low-income household. Then another highlight of the packages is the 50 trillion yen support for the AI and semiconductor sectors over the next 10 years, with the government saying like areas with the growth potential.
Yeah, it's a national strategy. But it's so interesting that you call this an addiction to public spending, right? Because you're saying that this size of the package is pretty big, but the economic situation has become better in Japan. So why do it like this?
That's right. Actually, some economists already said it's kind of contradicting considering Japan's current economic state. Like even the BOJ is in the phase of hiking interest rate, right? One reason behind this is probably that these sort of economic packages are increasingly seen as a tool to shore up the government support, and especially the case for Ishiba after his ruling coalition lost its majority at the latest election last month. So Ishiba really needs to show the public that his government can actually do the things to help people as the upper house election actually coming in the next summer.
So how has he been doing as a head of the minority ruling coalition, and what are some of the biggest challenges that he's facing right now?
Right. So, yeah, Ishiba really needs to kind of work closely together with the opposition party to pass, the extra budget to fund these economic packages and any other legislation past the Diet. Actually, the latest economic packages already reflect some negotiation with the opposition party. It said the Diet will discuss raising tax-free income ceiling during the tax reform debate in the end of the year. Then that's the request from the Democratic Party of the People, one of the opposition parties that won the kind of like power to say after expanding its seat. So, Ishiba will probably need to spend some time listening to those requests from the opposition party, which will make it a little bit hard for his party to focus on some agenda that party focus, including like the timing to start the tax hike to fund the increased defense spending.
Erika Yokoyama, economy and government reporter here with the latest on that economic stimulus package. And of course, we'll be watching how the markets react at the open. That package was approved on Friday evening, and we have seen that $140 billion of new measures. We are seeing some strength for the Japanese yen already. Last week, it gained some strength after we had core CPI numbers rising more than economists had expected. So there's more speculation that we might see a Bank of Japan rate hike come next month. We're also watching for the Tokyo November CPI numbers this week, another inflation print that the BOJ will be watching closely. We had some of the clearest indication yet from Governor Ueda that they may be discussing raising rates in the next meeting in December. And all of this as we're seeing a flurry of activity in the Japanese markets. Deal makers, activist investors have been injecting drama into Japanese markets, underscoring how frenetic trading on the Tokyo Bourse has become this year. Recent examples include Couche-Tard's high-profile bid for Seven & I and Elliott Management's newly revealed interest in Tokyo Gas. Oasis Management also increased its stake in Kobayashi Pharmaceutical and Nissan, while Sony is set to be in talks to acquire game developer and publisher Kadokawa. Let's get more on the investment themes at play in Japan with James Riney, CEO and founding partner of VC firm Coral Capital. James, great to have you with us.
Thanks for having me back.
Tell us a little bit more about sort of the investment environment right now in Japan and how it's different from the past.
Well, right now, it seems like there's a private equity venture capital sort of renaissance happening in the market. It's across a few different verticals, but I would say that the most noticeable areas are basically you see even first-time managers being oversubscribed, and a lot of the major firms are basically not accepting additional investors. And so in November alone, like we saw lots of annual meetings, and it seemed like everyone is in town. The who's who of institutional investors in the U.S. are in town, and a lot of that interest is actually trickling down into the venture capital space. And so even firms like us, we're on our fourth fund now, and we closed our fourth fund in April. And that was honestly a faster raise than we had anticipated. We closed that in 2-3 months, oversubscribed. But we're hearing about our peers also seeing lots of interest from foreign investors.
How many startups are you backing at this point?
Over the past 8 years, we've backed over 100. But keep in mind that we are also seed stage investors. So we are backing companies when basically like they just formed or the product has just launched.
What are the sectors that are most active?
So we basically like to look at areas that we call the Why Japan theme. There are two that are, I think, most interesting to this audience. One is what we call the Japan Advantage, And these are basically companies that are leveraging Japan's fundamental strengths in order to compete globally. So, for example, we backed a company called Kyoto Fusioneering, which is basically developing these components that go into fusion reactors. So Japan, for a long time, has been a leader in nuclear fission. That's why you have Toshiba, Mitsubishi, and the like as global leaders. But then also, Japan is a world leader in advanced manufacturing. And so when it comes to these very specific components, it's very important that Japan is able to leverage their strengths in both the nuclear space and the advanced manufacturing space in order to sell to a global audience. We've also done like semiconductor investments, and we see a lot of opportunity in defense space as well as the conflict in Taiwan gets a little bit more heated than it was before.
James, I find it interesting that you talk about the shift in the sort of investor profile, right, from just corporate VCs to institutionals. What's been the driver for or the catalyst for this kind of move?
Well, specifically on the venture capital space, I mean, the market has grown about 10x over the past 10 years. You've seen a lot more interest from global investors. For example, Sequoia Capital invested in SmartHR, which is a Coral company. And then most recently, you saw Bessemer Venture Partners make their first 2 investments in Japan, both of which were also Coral companies. Some of that is, of course, related to the fact that China is no longer an opportunity that a lot of U.S. investors can look at. And so when looking at Asia, where else do you allocate? Obviously, Japan, due to the size of the economy and the opportunity here, is increasingly interesting. But I think even a lot of investors in the U.S. are surprised to see how much the market has changed. And so you saw, Lux Capital and New Enterprise Associates investing in Sakana AI. And I was just in the Bay Area for 2 weeks most recently, and I was pleasantly surprised how much interest there is in Japan. So I think there's going to be more to come for sure.
And I think, as an outsider, you can see a lot of synergies and proximities when you take a look at Japan and South Korea, right? There's obviously reasons why there hasn't been more cross-pollination, if you will. Is that something that you can see happening in the future?
Yeah, so I recently wrote a blog post about this, and the sort of genesis of the idea is the fact that Korea and Japan, obviously very close neighbors. Going from Tokyo to Seoul is basically a 3-hour flight. That's as close as going to Okinawa. And there are a lot of cultural and structural similarities between Japan and Korea. So you have 30% of Japan being concentrated in Greater Tokyo area. Similarly, you have 50% of the Korea population concentrated in Greater Seoul area. The cultural similarities are, very long list of similarities there. The Hollywood of Japan, the Silicon Valley of Japan, the Washington, D.C. of Japan is all in Tokyo. Similarly, Seoul shares very similar characteristics. And so what I argued in my blog post is because these cultures are so similar, you should see more cross-pollination. So you should see more Korean companies expanding into Japan, more Japanese companies expanding into Korea. And now the younger generation is a lot more sort of receptive to the other culture. And so as these cultures connect more and more, I think there's going to be more business opportunities for them to flourish.
What about the regulatory and investment environment? Because when it comes to just the stock markets, we have seen some disappointment when it comes to the corporate value up program in South Korea as opposed to some of the corporate fundamentals that have improved here in Japan.
Well, that's not exactly my area, so I speak specifically to the startup industry in particular.
So the landscape and the environment for investments?
Well, what I see is that there are countries on both sides companies on both sides that are interested in looking into the other markets. And when you're looking at global expansion, you want to go into a market that is easier to grasp, more similar to your home turf. And on both sides, whether that be Korea or Japan, I think either side is...
Language barriers are not a problem.
The language barriers are also not as insurmountable. And so on both sides of the aisle, you see Koreans that speak Japanese fairly well, and then vice versa, you see Japanese also speak Korean fairly well. And that's, that has to do with like the interest in K-pop, the interest in manga on both sides. And so there's a cross-cultural exchange. But even on both sides, if you look at who are the the tourists that are most frequently visiting Japan or most frequently visiting Korea. And in both cases, it's the other side. And so there's already that exchange happening. So I think it's only natural that you see more of that exchange on the business side.
How much government support do you have in these two countries when it comes to trying to make the startup culture more dynamic?
Yeah, so both the Korean government and the Japanese government have set up government-related funds that invest in startups. They've also been very proactive on deregulation and promoting startups as a new growth engine for the economies. So I see similarities even structurally as when it comes to governments supporting startups.
Jen-Hsun, good to have you back in the Tokyo studio. He's the CEO, founding partner at Coral Capital. And of course, you can catch Japan Ahead every Monday at 8:40 a.m. If you're watching here in Tokyo, that's 7:40 a.m. in Hong Kong, 6:40 p.m. Sunday in New York. And also you can go to TV Go for any of our past interviews and also any of the functions that we show you on air. This is Bloomberg. We continue to watch the dollar, which has gained ground for 8 consecutive weeks. That's the best run in more than a year. But you can see right there that sharp drop that we saw. The dollar falling with Donald Trump's pick of Scott Bessent for Treasury Secretary, seen by the markets as a more measured choice. Of course, he is a veteran hedge fund manager. He's going to become the next Treasury Secretary if he's confirmed by Congress. He's seen as having tested experience dealing with global financial systems, someone familiar with markets, but also somebody who perhaps favors less spending and more gradual tariffs. We've seen his comments around wanting a shadow Federal Reserve chair, not to mention a potentially weaker dollar as well. So, Haidi, we continue to watch those market moves surrounding this nomination because we also saw a little bit of a reaction on cryptocurrencies as well.
Oh, yeah, you say that this is a kind of more measured choice, right? Measured is not how we describe the ascent to close to $100,000 for Bitcoin, but we've seen that rally stalling just shy of that level, 97,000 or thereabouts, just under 98,000 is where we're sitting at the moment, but falling after approaching that key milestone. Investors are now a little bit concerned that the optimism is getting overdone. Of course, President-elect Trump's support for crypto more broadly, the role of Elon Musk in the cabinet seen as a positive factor. Friendly regulations and a national Bitcoin stockpile are all sort of on tap in terms of those policies. But we are seeing that pullback. But still, even with the recent retreat, value remains high. The ETF funds investing in Bitcoin amassing $107 billion in assets since January. So we are still looking at that 6-figure milestone, but at the moment struggling to gain traction. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After we saw those Trump trades still fueling U.S. stocks, Haidi, we finally have a nomination for Treasury Secretary as well.
Yes, and it is really kind of seen as being heeding Wall Street's recommendations after what has been mostly a series of anti-establishment picks for the rest of his cabinet, right? So perhaps this comes as a little bit of a relief, but we do know that Scott Bessent also holds some views that very much align with the president-elect's.
Yeah, we'll see if we get a little bit of a relief when it comes to Asian stocks trading today on this Monday, because we have seen some significant pressure for Asian equities. We're talking about headed towards the first back-to-back losses when it comes to the Asian equity index. In fact, the Nikkei has lost ground for 2 consecutive weeks already. We are seeing it coming back online, gaining about 1% at this point, as we're seeing a little bit more strength on the Japanese yen, but still holding at around that 154 level. We're going to continue to watch for market reaction to that $140 billion economic stimulus package coming from the Prime Minister Ishiba's cabinet that was approved on Friday. Take a look at how we're trading in Korea as well, because we have seen the Korean won really lose ground against the U.S. dollar for almost 2 weeks already. We are seeing a little bit more strength as well, headed towards that 1400 level. We have the Kospi gaining 0.9%. This, of course, as we're headed towards that Bank of Korea rate decision. No change expected this week, Haidi.
Yeah, take a look at what we're watching when it comes to just about an hour into the start of cash trading here in Sydney. We are seeing another record high, actually, when it comes to the ASX 200, up about 0.6%. We're off those session highs at the moment, but mostly being driven by gains in the big miners, some of the healthcare stocks as well, advancing this morning. We are also watching a little bit of upside when it comes to trading in Kiwi stocks as well. We saw some retail spending numbers seeing a decline for a second straight quarter. The impact of higher rates and consumer demand, and of course a pretty consumer sensitive part of the year, just sort of building more hopes into what to expect from the RBNZ. The Aussie dollar is actually seeing some positivity, 65.39, as we see that Treasury pick reaction when it comes to the dollar more broadly there. And watching US Treasuries as well, futures really seeing that advance after we did see the establishment pick, in a sense, of Scott Bessent for Treasury, but certainly someone who has a proven track record for Wall Street. Let's bring in Leung, who's the investment strategist at ETF Focus Investment Management Global X. And we've seen a lot of trades around the Trump trade, and that sort of receded somewhat. The Treasury pick now out of the way, does this give sort of a little bit of assurance to Wall Street?
I guess it does. I guess one thing that we've learned from, the first Trump administration was that things tend to happen very fast initially in the initial parts of the administration, and things get very loud as well. So I think in terms of maybe in the more context of the technologies area, what we saw in the first Trump administration, or what the key learning was that we saw a lot of the key impact being pushed forward. So what we do have to realize is that, when we do have a lot of these policies coming in, when we do have a lot of regulations coming in, bills coming in, it actually does take time, to actually get congressional approval, and also impact on the stocks will take time as well. So I think what we did learn from this last time was that, there is a lot of mispricing early on in terms of the administration, and this could be a potential risk as we are seeing right now.
We're mispricing to the upside at the moment.
Potentially, if we are pushing a lot of this impact forward right now.
Particularly when it comes to tech, and is that really a risk for US tech or the broader kind of ecosystem? Do you worry about China versus US at the moment, or does that actually... Does China perhaps, prove to be a little bit of a hedge? Yeah,
I guess it's a two-part question. Yeah. I guess on the US tech side, I think in terms of the administrative policies, definitely would have more impact on the US tech initially. If you look at the Trump's current administration and the incoming policies, there's a few key elements, right? There's the first one, which is the tariff, which I guess everyone is quite well versed with. We also have deregulation. We also have lower taxation, immigration, and energy. I guess the last two has less of an impact on technology, though one can argue that immigration policy has impact on, I guess, talent and inflation as well. But in terms of deregulation, whether it's going to see more IPOs, capital market activities, M&A activities, and also lower taxation where we have the big tech names which have quite high effective tax rates, we are going to see relatively positivity for the tech sector in the US alone.
How resilient has Chinese tech been so far?
Well, I guess in terms of recently, I guess the US tech reaction or the China tech reaction has mainly been on earnings. I wouldn't say it's lackluster, but I think in terms of what we've seen with China tech or China internet especially, is that we just haven't got a strong sense of excitement. But I think this is more to do with, I guess, the overall view or the overall sentiment with China rather than the actual fundamentals of Chinese tech.
We're seeing a big market reaction right now when it comes to the Treasury space as well. 10-year yields opening lower. We'll continue to see the pressure, and that Treasury sell-off that we saw over the past 2 months continue to take a little bit of a breather. Is this just market reaction, just immediate reaction to Scott Bessent being appointed Treasury Secretary, and how long can we expect this to actually last? What are the macroeconomic fundamentals that could actually be affected here?
Yeah, I would agree that this is definitely more of a reaction to the recent appointment of Scott Bessent. And, we've seen this because recently we have seen the very strength of the USD. And it has, like you said previously, had that negative impact on Asian currencies, whether it be won and even the yen as well. In terms of my view, I think, this could be more short-lived, or it could have less of a leg, mainly because if you look at most of the Trump administrative policies, they are more on the stronger USD side, whether it be tariffs or whether it be other of his policies that we just spoken. They are mostly stronger for the USD.
What does that mean for the Japanese yen, for example? We're headed towards another policy decision in December, but at the same time, of course, it's not only about the BOJ, it's mostly about what happens to the Fed and the USD.
Yeah, definitely. I think in terms of the Japan area, this is definitely a much more complex one in terms of what the regulators do. But, I would say that, we are still, in terms of what our view is, that we are still looking at more towards a stronger dollar, which could impact and which could have a negative impact on the overall Asian currencies, including the yen.
What does that mean for equity markets? We have seen exporters, for example, seeing some gains in Japan.
Yes. Definitely. I think in terms of exporters, this is going to be a definitely big impact when we see that stronger US dollar coming back in. We don't have a strong sort of conviction or view on the Japanese equities, but, we are still looking at the stronger dollar impact on the overall equities market.
Do you have a view when it comes to China equities? Does that remain dependent on what sort of more fiscal we get? Or?
I would definitely agree. I think if you look at, for example, using the recent tech results as an example, these results may be lackluster in terms of excitement, but we're still seeing very strong momentum. For example, if you take Tencent, for example, when we look at Tencent, its core business in terms of games, we're still seeing strong growth, and we're possibly seeing a re-acceleration of games business into Q4. For Tencent, we're also seeing improvement in its AI adoption, improvement in its ad load, improvement in its WeChat, Weixin search logic. So in terms of the actual fundamentals we're seeing, it's actually quite okay, and we're seeing decent valuations as well in terms of the Chinese equities. So I would definitely agree with you in terms of it's more of a sentiment that we need that sort of macro stimulus drive to turn things around.
Billy Leung, who's the investment strategist at Global X, more ahead on the Asia trade. This is Bloomberg.
President-elect Donald Trump has tapped hedge fund executive Scott Bessent as Treasury Secretary. Government editor John Herskovitz joins us for more on this. John, this seems like a clear nod to Wall Street. What message is Donald Trump trying to send?
I think that he was not trying to rile Wall Street with this appointment. This is someone who is well-versed in global markets and currencies, and someone who is seen and supported by people who are making the investments. The job is the chief salesman of bonds, keeping the dollar in order. So this appointment was very much headed towards someone who could appeal to Wall Street and wouldn't rile up the markets. And it comes after there have been some tumultuous picks from Trump for the Attorney General and some other positions. So this was more establishment than a institution breaker.
And yet we are seeing some market reaction already. Treasury yields continue to fall in the Asia session.
Yeah, and we've seen some with the dollar as well. The dollar has weakened. It's market players see Bessent as someone who is going to be looking for a weaker dollar. While there were worries about Trump supporting a stronger dollar through this. So we've seen some a cooling off of the Trump trade and early trade in Asia because of the appointment of Bessent for Treasury Secretary.
Yeah, we've talked about Scott Bessent as the establishment pick, right? But there are certain Trump-aligned policies that he's supportive of.
Exactly. We've seen him in support of Trump's tariffs. We're going to see probably his support for the tax cuts that were part of the Trump administration, which could be unwound and probably go forward with the Trump administration. And also the one thing we're going to see is how much Bessent will weigh in on the appointment of a new person to run the Federal Reserve, if that were to be the case when Jerome Powell's term is over. So we've seen some alignments. He ticked a lot of boxes for Trump, and he ticked a lot of boxes for Wall Street. So I think this is the type of appointment that works well with Trump's world and perhaps also with investors.
Our government editor John Herskovitz there with that market reaction that we continue to see play out when it comes to Scott Bessent being tapped for Treasury after what has been a little bit more of an elongated search than the rapid-fire appointments of some of those other key roles in the incoming Trump 2.0 cabinet there. We are, as John was alluding to, seeing that market reaction, particularly when it comes to the dollar. The dollar falling as that Treasury pick kind of tempers some of the Trump bets, the nomination being seen as being a bit of a phased approach there. And we're seeing that correlated fall across Bitcoin as well there. So tempering some of the most fevered bets spurred by that Trump trade, if you will. We're seeing that decline against most major peers, the Aussie and the Euro kind of leading those gains, trading against the greenback there. We are seeing dollar China also looking pretty muted at this point, although it will be quite interesting to see further reactions to the yuan given some of the pressure that we have seen. We are getting expectations when it comes to, on the data side, just seeing Chinese exports to reach a historical high this year before, of course, a great deal of trade uncertainty descends upon next year. And let's get some more when it comes to that latest survey of economists showing that we could see outbound exports for China seeing that record high. Foreign companies seem to be front-loading these orders ahead of the expected tariff increases from the Trump administration. Let's bring our Chief North Asia correspondent, Stephen Engel in Hong Kong. So, you know, in the same way that we're seeing some American companies already taking action before all of this potentially plays out, what's the impact that we're seeing so far when it comes to shipments from China?
Well, we already saw it in October, and that was before the presidential election in the United States, where exports were up some 5%. So there was some front loading going on even before the election, with the expectations that perhaps there is going to be more of a protectionist sentiment from the United States. We all know what Donald Trump has pledged to do, and that is across the board 60% increase on tariffs. That's on top of the 25% tariffs that he imposed in his first term and that the Biden administration kept in place on some $300 billion worth of exports to the United States. We'll have to see, of course, whether Trump, the businessman, negotiates that down in any kind of trade negotiations. But still, many foreign companies are hedging their bets and buying. Erica Tay of Maybank, an economist there, saying it's panic stockpiling. A bit alarmist, but again, her words, panic stockpiling by foreign companies to get ahead of the curve, ahead of the inauguration of Donald Trump, who has said tariffs are going to be a top priority in the beginning days of his second term. And keep in mind as well, you know, China is preparing as well for perhaps a rise in protectionism, and all eyes are on what kind of stimulus China might unleash over the next weeks or months to help stimulate domestic consumption.
Steve, Chinese Premier Li Qiang is meeting with foreign business executives today. How are we expecting him to try to Trump-proof his relationships?
Yeah, right. This is not too much of a surprise. I mean, we are expecting Li Qiang today in a meeting, in a roundtable, if you will, with foreign business executives who are there for a big supply chain, the second International Supply Chain Expo in Beijing. He did the same thing earlier this month when I was in Shanghai for the China International Import Expo, CIIE. He also met with foreign executives. This time we're hearing from sources the executives from the likes of Rio Tinto, Corning, Thailand CP Group will be meeting with Li Qiang at some point today ahead of that supply chain expo that begins tomorrow. But surely the foreign executives are going to try and get reassurances from Li Qiang that they will continue to import going forward. And again, Li Qiang just needs to assure them that they are, the Chinese economy perhaps has bottomed out and will hit its target of around 5% growth this year. That's been the consistent message from Li Qiang.
Chief North Asia correspondent Stephen Engel there. And take a look at one big move in the Korean session today. Samsung gaining ground. We had heard from Nvidia CEO Jen-Hsun talking about how it's working really fast to certify Samsung's AI memory chips. Of course, we have seen some delays and snags on that front, but we'll continue to watch any progress that they might see on this new technology as Samsung strives to catch up with rivals like SK Hynix in South Korea. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade. These are some of the latest geopolitical stories that we're following. The Chinese government says it started a special program to crack down on what it calls unfair internet practices. Regulators say these include manipulating rankings to hype up hot topics and infringing on people's rights to do business online. Beijing is urging portal operators to rectify issues and enhance algorithm security. The program is in effect until February 24th next year. Singapore Prime Minister Lawrence Wong is set to take charge of the ruling People's Action Party, consolidating his leadership ahead of a general election due next year. The PAP has run the city-state uninterrupted since independence in 1965. Wong, who's also finance minister, has pledged to boost safety nets and reskilling programs as part of a national strategy to fight income inequality.
Shery, to geopolitics now. And Iran reportedly planning to hold talks about its nuclear program this week with European nations, including the UK, France and Germany. Tehran last week said that it would ramp up its nuclear fuel-making capacity after it was censured by the UN atomic watchdog. For more details, our Bloomberg editor Michael Heath joins us now. So what do we know about these upcoming talks?
Not a huge amount, Heidi. I mean, the basic idea, I guess, is that Europe's always been at the forefront in terms of negotiations, particularly when the Obama administration did the deal with Iran. I think it was 2015. Europe was also very quick to get in and start doing business in Iran as well. I mean, it's a very big market. But at this stage, I suspect it's sort of trying to lay the groundwork to give an option, perhaps, for to do something with the new Trump administration. It remains unclear whether that administration would be interested in this. I mean, during President Trump's last term, he obviously went for this policy of maximum pressure on Iran. He just tried to squeeze it as hard as he could economically. And Iran, as we've seen from the war, with Israel and with the proxies as well, Iran's not in great condition, and certainly economically it's not in great condition either. So their president has he's been sending signals that he'd like to have some sort of agreement, potentially along those 2015 lines, which again President Trump and Prime Minister Netanyahu of Israel were very critical of that agreement. So we sort of just need to wait and see whether Trump sees this as an opening to perhaps do a deal or a sign of weakness from Iran, and it's best to squeeze them hard. It's hard to tell at this stage.
And whether sort of the rest of the region gets wrapped up into any kind of deal that he wants to see, right? Yeah, well, I mean, as you mentioned last time, I mean, whether there's a grand bargain on offer, but there's a lot more. It's a lot more fragmented than it was then. Then you had a lot of the Gulf states really worried about Iran, its influence and that sort of thing. Iran has obviously been weakened by Israel over this past year or so, and Saudi Arabia and Iran and some other Gulf states they've patched up their differences, so they're not quite as acrimonious. The relations aren't quite as acrimonious as they were. So there's a lot of moving parts there for Trump to sort of deal with. But Iran and Israel obviously are central ones there. Saudi Arabia too. So it's just trying to square that circle, whether he can do that or whether he wants to do that.
Yeah, you're sort of alluding to that changed landscape when it comes to the Middle East, right? So what are we expecting Iran's new leader's reaction to be when it comes to dealing with a Trump administration?
Yeah, well, as I was sort of saying, Shery, I mean, their economy is not in good shape. It's not a popular regime either, but it's a regime that's prepared to use heavy repression on its people when it needs to do so. There's not really any sign that it's going to be overthrown or anything. I mean, the sort of basis with any authoritarian regime is while it's prepared to kill its own people, it's very, very difficult to overthrow them. It's when they, get a more reformist bent and don't want to do that anymore that things tend to happen. This president of Iran he's sort of viewed as a reformist, a fairly pragmatic person. We've seen such people before. So there is potentially an opening for a deal if the US wants to do this. But the Trump administration, the early foreign policy picks are all very, very hawkish. They have long records of opposing Iran, and the US tradition is that it's fairly hostile towards Iran as well. So it would take something different. But then, President-elect Trump is a potential deal maker. So you'd never say never on this.
In a way, sort of everything's thrown up in the air. Right? We kind of are looking to the intelligence pick for President-elect Trump, and some of those Russia connections that clearly even Republicans are worried about. But what's at stake here as we look into next year? Because quite clearly, from Beijing to Moscow, we're all very, very, keenly watching to see the approach, hawkish as the expectations are.
Yeah, I mean, look, you've got that connection of, you've got Iran, so presumably the US is going to be very hostile to Iran, I mean, just based on past comments and history. With Russia, obviously, Trumpism is quite pro-Russia, quite sympathetic to Vladimir Putin. With China, they see it as a strategic competitor. Then you've got North Korea that comes into it, where Trump has, sort of had this unusual relationship with Kim Jong-un, though North Korea sort of said that they came out with a statement recently saying that US policy has basically shown itself to be hostile the whole time, so there's not much to do there. But I think what the US would love to do is to peel off or to split apart that sort of axis of groups, because they're potentially dangerous and they potentially have a lot, they can assist each other a lot, and China is central to that, of course. China sort of keeps them as an option to create trouble while at the same time dealing with the West. So for China it works on both ends. For the others, Iran, Russia, they've got nowhere to turn, though Russia may well do if Iran does strike a deal, if Trump does strike a deal over Ukraine.
Bloomberg's Michael Heath here in Sydney. Let's take a look at how futures in Europe are opening up at the moment, because we have seen some analysis showing that European equities are some of the most exposed when it comes to US revenues, and therefore that vulnerability is clearly there for these regions' equities as we head into some of that uncertainty over a potential, Trump imposition of tariffs on worldwide imports, including about 80 stocks in the MSCI Europe ex-UK that have that geographic exposure. Broadly speaking, we're seeing a little bit of upside there when it comes to the intraday trading in the last session, but European stocks enduring their worst stretch since 2020 at this point, with some of that weakness through earnings, but pretty dramatic divergence that we've seen from global stocks, Shery.
Yeah, and Heidi, take a look at one stock that's moving in the Tokyo session. That's Panasonic, at one point falling more than 2%. Over the weekend, we heard reports that Panasonic's subsidiary Blue Yonder had been hit by a ransomware attack. It told CNN that they have no timeline for restoration after the disruption from that ransomware incident. The firm provides cloud computing software services for some UK grocery chains. So we'll continue to watch the latest developments around Panasonic's Blue Yonder. On a day like today, when we're seeing broad market strength today, the topics gaining ground. Every sector is in the green, healthcare, consumer discretionary leading those gains in Japan, while the Nikkei is also gaining about 1.5%. We have more ahead on the Asia trade. This is Bloomberg. Bitcoin continues to gain ground in the Asian session, but we're still stalling a little bit after approaching that $100,000 level. We were at those record highs on the Friday session already, but you can see the market cap right now really close to that $2 trillion level. We've actually gained around $1 trillion since Donald Trump's election win. Investors now betting on friendlier regulations and increased mainstream interest. But our next guest says consolidation for the crypto market is inevitable as it matures. Joining us now is Esme, founding president at the Global Digital Visionaries Council. Esme, good to have you with us. Are the biggest catalysts at this point just the election of Donald Trump? What should we be watching out for in 2025?
Yeah, good morning, and thanks for having me. So we've indeed approached very exciting times for digital assets, and I believe that we're just at the very start. And right now, Trump's election and also the ripple effects across the global digital assets economy has sparked a beta rally. I expect as we head towards next year, the beta rally to consolidate and for the market to pull back as investors take profit. However, I do see that we're supported by very strong volumes. So my playbook for next year would be, as we approach the second quarter, we're going to see more interest and also activity and investor participation in the altcoins, i.e. smaller market cap alternative assets and digital assets. And the next thing is I'm personally very positive on the institutional piece, i.e. tokenization and also stable coins, especially non-USD denominated stable coins. So on that front, we've seen really interesting activities, whether it's from the regulators. Obviously, Trump will be a very big topic here. And however, I also see that for Asia, with most recently, we do see that for MAS, for SFC, and also HKMA, they've put across very interesting activities around there for public-private partnerships.
What sort of actions do you expect from other nations if the Donald Trump administration becomes friendlier towards the crypto markets?
Right. I would say that the key idea here would be around ecosystems. So in the past, we've seen a lot of polarization when Gensler was in the helm, and therefore we see that U.S. is by itself its own jurisdiction and followed by other Asian countries, and we do see that a lot of capital talent flow has flown from U.S. to Asia as a result. However, under a more concerted and coordinated move by Trump jurisdiction, what I expect is that there's going to be a more globally coordinated approach, and with Trump stepping forward, there's going to be ripple effects, and I expect that will draw a lot of virtuous cycles for the other jurisdictions, whether in Asia, in the Middle East, and also Europe with MiCA to follow suit.
Is the risk to the downside at this point as we approach that milestone level of 100,000? Because there's not a lot of sort of solid policy to back it up yet.
Right. How I would compare that would be with other asset classes. As we see that for digital assets, particularly with Bitcoin slowly growing out and maturing, we're going to see similar patterns as how equities would have traded. So right now we've seen a policy announcement from the top down. So what needs to be connected would be that flowing through to the corporate activity and also retail activity. So with that, I expect market structure changes. Previously, we've seen that there's a lot, the lion's share will be on retail trading for Bitcoin. However, I expect that to slowly move across to institutional activity, and that's primarily because, as you see from this Bitcoin cycle, how it differentiates is that there's more ETF laying the ground for institutional participation. For example, beginning of the year, January, we saw that U.S. SEC has approved spot ETFs. In April, SFC has also approved spot Bitcoin and also Ether ETFs. And as a result, right now for Bitcoin ETFs, they already account for about south of about 6% of Bitcoin spot trading volume.
What does it mean for M&A?
Yeah, for M&A, so as the sector matures, so I expect there to be a lot more interest and also focus on scalability and also efficiency. So what that means is that there's going to be more global concerted activity. For example, case to point would be Sony. So Sony has just announced a Sonium public blockchain, and that is basically pulling together the corporate headquarters, Japan resources, also with Singapore. So that's case number one. And number two would be more public-private partnerships. So, for example, whether it's MAS with Project Guardian and also with SFC and also HKMA with a stablecoin issuer sandbox. So that's going to bring in a lot of capital and also to give institutions a voice in the table. And just going through to more commercial on the commercial and private sector. So I do expect that in the past few years, so there's been a lot of excess capacity, whether it's around secondary trading venues or whether it is for different cross chains. So I expect there to be more consolidation as efficiency as more different companies go in and also weed out the excess capacity that has accumulated in the past years.
It's been really interesting to be here in Japan and just notice how Japan's been sort of at the forefront when it comes to creating these legal frameworks around digital assets, not to mention stable coins, just a few years ago. What can we learn from the experience that Japan is going through and how it could be mirrored in other parts of the world?
Right, sure. That's a great question. So what Japan has done right is that in 2016, when it established one of the world's first digital assets legal framework, so it's done very well in terms of investor guardrails and also promoting innovation. So as a result, just coming out of the FTX predicament, so we've seen that Japan was one of the economies in which retail investors got their assets back from the failed exchange. So as a result, I believe that if you look at different case studies, for example, in Hong Kong and also in Singapore and in the Middle East, so they put a first priority when it comes to investor protection, which I wholeheartedly agree. And the second thing is, again, just tying back to the ecosystem concept. So Japan has done very well in terms of proliferating and making sure that the entire ecosystem proliferates. And as a result, you can see that there's a conduit of liquidity throughout the ecosystem. So just starting with virtual crypto exchanges, and then the next it will be around stable coins, which will price on-ramp and off-ramp for both retail and institutional investors. And also their private companies have come up with different public blockchains and also tokenization projects, which allows for a very coordinated ecosystem. So what other economies can take out of this playbook is that, number one, SFC has done a very good job for Hong Kong. So in the years 2023 and 2024, so they put out the FATB-led licensing framework. And that kind of set out a very solid foundation for them to embark upon other projects. So just recently in October, so we've seen that the HKMA has again reinforced stablecoins and also put out a stablecoin issuer framework. So I expect that in 2025 for that to continue, and there's going to be more support around trading activity, whether it's around OTC regulation and around tax concessions, which we're seeing in Hong Kong and also in Singapore, and I expect the same case in US.
Esme, really great to have you with us. Esme Powell, founding president at the Global Digital Visionaries Council. Let's take a look at commodities at the moment as we continue to see geopolitical tensions weighing across the board as a great deal of uncertainty remains when it comes to some of the developments that we see across Israel and Lebanon. We're hearing a reporter from Axios saying that Israel and Lebanon are on the cusp of a ceasefire deal. We have seen perhaps a little bit more willingness when it comes to this front of the conflict that, of course, is sort of sprawled throughout the Middle East at the moment, that perhaps there is a little bit more willingness. We did see the last reporting as Hezbollah saying that it was waiting to see Israel's response to the draft of the truce agreement. That US drafted ceasefire proposal. We heard from the Hezbollah chief just a couple of days ago saying that they're still waiting to see whether this will yield a result or not. There has been additional progress that has been made in these truce talks, and we're now hearing reporting from Axios that Israel and Lebanon are on the cusp of a ceasefire deal. Shery.
And take a look at some of the other moves, especially in the Treasury space, because we continue to see yields under pressure at the moment. We are talking about the 10-year yield falling now for second session and at the lowest level in about 2 weeks. This, of course, after surpassing that 4.5 level just on November 15th. We are seeing that Treasury sell-off, a 2-month sell-off, taking a little bit of a breather the last few days. We had seen Trump's presidential victory, expected inflation remaining elevated, all of that, not to mention a little bit of stronger eco data coming out of the U.S., having pushed the yields sharply higher since mid-September, but all of that sort of being under pressure right now, especially after Donald Trump chose Scott Bessent, a veteran hedge fund manager, to become the next Treasury Secretary. That nomination is seen as more muted and moderate. So perhaps with this nominee favoring less spending and more gradual tariffs, we're seeing a little bit of that reaction in the markets, and we're seeing the dollar also under pressure after 8 weeks of gains. That was the best run in more than a year. Now, the dollar continues to be under pressure right now as we're seeing a little bit more upside among Asian currencies at this moment. We have more ahead on the Asia trade. This is Bloomberg.
This is the Asia trade. Gautam Adani and his nephew Sagar Adani have reportedly been summoned by the SEC to explain U.S. allegations in a $250 million bribery case. News agency PTI says they have 21 days to respond to the legal requests. Meanwhile, a U.S. agency says it's still conducting due diligence after last year agreeing to a $500 million loan to an Adani Group-backed port development in Sri Lanka. Let's bring up Bloomberg opinion columnist Shery, who thinks that Adani's legal woes are souring this year's lucrative bond trade focused on Asian high-yield dollar notes. Shery joins us now for more. So we've seen this, fleeing to some of these names in India and Indonesia, for example, the idea of being too big to fail. But does this fundamentally change the landscape when it comes to offshore high-yield?
I think so. I mean, it's no secret that emerging markets, high-yield bond investors had a couple tough years, right? 3 years of Chinese developer defaults, and automatically they've been going to the other big tycoon names in Asia, such as Adani, Vedanta, etc. In fact, earlier this year, Adani managed to raise another $400 million dollar bonds, despite last year's short seller allegation that it was manipulating stock prices. So now those global investors, they have to give their investment thesis a second thought. Is it wise to choose tycoon families that are perceived too big to fail? And, after the developers, last year, we saw Hong Kong's New World Development. It was creating a lot of volatility. And this year, Adani again. So they have to reconsider that investment thesis.
But Adani again, right? I mean, just in 2023, Adani was already targeted by short seller Hindenburg Research accusations. So how does this U.S. indictment stack up to that?
I think in a way it's even worse because before it was about stock manipulation, right? And global investors, bond investors can say, oh, it's a he said, she said. It's no clear-cut decision. But with this case, it's quite different because it's related to specific project financing. I mean, look at the $600 million bonds that Adani Green had to scrap. It was backed by solid cash flows from long-term contracts with local governments. And now global investors, they will have to say, okay, they have to do due diligence and say, okay, is there corruption involved with that project financing? And I don't know if international investors want to get involved in India's very complex regional politics.
Bloomberg opinion columnist Shery there. And take a look at Samsung right now. It's still up right now, gaining about 2%. Together with the rest of the Kospi market, the Kosdaq is also gaining at the moment, as we're seeing broad upside for Asian equities in today's session. Nvidia CEO Jen-Hsun Huang saying that they're working fast to certify Samsung's AI memory chips. Jen-Hsun Huang was speaking in Hong Kong. He's called for maintaining global cooperation as the world braces for renewed tensions between the U.S. and China once Donald Trump returns to the White House. Huang was speaking in Hong Kong, where he received an honorary doctorate. He highlighted the contributions China has made to the development of AI. We also asked Huang about what he expects from the new administration.
I don't know what's going to happen with the new administration, but whatever happens, we'll balance simultaneously compliance with laws and policies, continue to advance our technology and support and serve customers all over the world. We'll continue to do that, and we'll be able to do that just fine.
And Chinese investors are digesting a letdown in tech earnings, with the 5 biggest tech firms erasing $41 billion in market value over the past week. For more, let's bring in our China correspondent, Mingmin Lo. So we continue to see this sell-off in Chinese stocks. What would it take to win investors back?
Yeah, I mean, the earnings season is almost over, and it's been quite disappointing overall. I mean, Baidu last week lost as much as 10% in its stock price at one point because of the revenue seeing the biggest drop in 2 years. Baidu is saying that it's not really seeing any significant uptake in advertising spending or consumer spending, and the same thing with PDD, saying that its profits likely to continue trending downwards, and that really has wiped out the sort of optimism that we have seen since the post-September, October rally. And if you look at the Hang Seng Tech, it has lost about 20% of its value since the October peak. The same thing with the Hang Seng Index as well. It's down about 17% from the October peak. So a lot is really going to hinge on what Beijing will do next, because there's a lot of uncertainty. You add to that that slow pace of stimulus, there is also the threat of tariffs and a potential escalating trade war that is really weighing on overall sentiment here.
What are some of the potential pockets of opportunities?
Yeah, I guess consumption plays would be still one area to look at. That's where investors are still betting their money on, given that the consumption sector is likely to be one of the bigger beneficiaries of government stimulus measures next year. The expectation is that the Chinese government will continue to try to bolster domestic consumption, given the vulnerability of this export-driven growth, to try to steer China away from that two-track recovery. There is also the idea that the government is perhaps still waiting for more visibility of Trump's policies before deciding on the scale and timing of stimulus. So the direction of travel will likely continue to trend upwards in the longer term. And it's possible we might already be seeing the bottoming out of the consumption sector, given the quite positive numbers we saw in the October retail numbers, although there's questions around how sustainable that is, given that it's largely bolstered by the very long Singles Day promotion as well.
Bloomberg's China correspondent Mingmin Lo there. More ahead on the Asia trade. This is Bloomberg.
Big moves in the Tokyo market today. We're seeing shares in KQ and Keisei Electric Railway jumping. This is after a Toyo Keizai report that an investment fund linked to activist investor Yoshiaki Murakami has built stakes in the Japanese railway operator. So KQ's stake is nearly 5% and appears to have increased from October, while Keisei's stake is still below 1%. This is according to Toyo Keizai, citing an unidentified person. And you can see Keisei Electric there gaining more than 16%, Heidi.
Let's take a look, Shery, at Hong Kong's rental market. Polar opposites due to a shift in demographics. Districts popular with Chinese immigrants and seeing rents inch close to record high levels, but areas previously favoured by foreigners, by expats, have plunged by as much as 12% in the first 10 months of this year. Real estate reporter Shana Kwan joins us now. So it's really interesting what's happening with Hong Kong rents, and is this reflective of the divergence and shift that we see in demographics?
Yes, like you said, Hong Kong's rents are closing to record high, but then we also see it only happens in areas where it's favored by mainland Chinese, but then in areas that it's favored by expats, we are actually seeing rents decline.
Tell us a little bit about how some of these areas are faring right now as compared to some divergence that we're seeing or some trends.
Yes, so for example, in the West Kowloon area where the high-speed rail station that's connecting to mainland China is, 70% of the new tenants are mainland Chinese. So they are actually the people holding up the rental market there. But then in areas like Stanley or the Peak, where it's usually the foreign expats that's the usual tenants, we're actually seeing rents decline. So that's quite interesting.
Is this sort of part of a longer-term demographic shift then? Is it sort of one direction? Where do we expect this market to go?
So I think from what we see now, I think mainland Chinese will definitely be the major source of tenants in Hong Kong, and we expect to continue to see this trend.
Real estate reporter Shana Kwan there with the latest on Hong Kong rents. We have breaking news at the moment. We are now seeing that Uruguay has elected Yamandu Orsi of the left-wing opposition party to become the next president. This was in a runoff vote on Sunday. They're joining an anti-incumbent trend in the Americas. Voters worrying about inequality and crime, spurring for change. So President Luis Lacalle Pou called Orsi to congratulate him already on winning the election in Uruguay moments before the incumbent candidate Álvaro Delgado conceded the race before the official count was finalized. We are now seeing that Yamandu Orsi has won the Uruguay presidential election, and this was after a runoff vote on Sunday. He's coming from the left-winning opposition party and is set to become Uruguay's next president. President Luis Lacalle Pou has already called Orsi to congratulate him, and before the incumbent candidate Álvaro Delgado also conceded the race before the official count was finalized. Of course, we are seeing Uruguay being one of the latest countries to oust an incumbent party this year. Orsi successfully tapping over voter angst about really high violent crimes that we have seen in Uruguay in the past few years, not to mention an economic recovery that has left many behind. So this surging inequality in Uruguay has become also a key issue for voters. And now Uruguay, that once was famous for stability, in a volatile region, Haidi, we are seeing those violent crimes rising and voters voting for change. Yamandu Orsi having been elected now as Uruguay's next president in a runoff vote on Sunday. That's it from the Asia Trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China Show is next. This is Bloomberg.